Hey, how's it going, everybody? My name is Caden, and today I'm bringing you guys a little bit different of a video than I've done in the past. So usually I pick a stock and I go over a specific company. Today I want to go over how I choose a company and kind of the factors that I look at to decide if this one's a buy or not. And I think this is particularly important today because, as you can see, the market is getting beat up pretty bad. NASDAQ is down almost 3%. It's fallen below that 13,000 support level. It might have a lot more room to go down. So these are the type of days you want to know how to look at a company and determine if they're going to be a good long-term buy. So that's exactly what we're going to be going over today. So if you guys like what you're watching, make sure you hit that subscribe button and let's get right into it. So the first thing I'll say is you got to remember that you're investing in a company. So it's just important to remember that. Just kind of think, what would you say if somebody came up to you on the side of the street and they asked for you to put $1,000 into their company? You'd probably have a lot of questions for them. You wouldn't just hand it over. But I think in the stock market, because everything's just on the computer, they're all digital zeros and ones that we're dealing with, I think it's a lot easier for us to just throw money out there without really doing the proper due diligence. But you guys are obviously smart. You guys are on YouTube looking for videos to learn more about stocks, and that's why you're watching this one. So the hardest part is usually finding the company to start researching to begin with. There's a few things you can do to find different companies. You can go on YouTube, you can see what's trending there. You can go on Twitter, you can see what people are talking about there. You can look at what institutional investors are doing. You can see what stocks are moving in and out of hedge funds. Or you can be like 99% of the people these days and just buy whatever Cathie Wood is buying. No, don't do that one. I'm just joking. For the purpose of this video, I'm just going to use Etsy as an example. I'm going to pretend I don't know anything about them, and I'm going to go through what I would do if I was investigating this company, determining if they are worthy of my money. So the very first thing you're going to do once you find a company you're interested in is you're going to go onto their website. Etsy IR. IR is investor relations. If you search any company with IR afterwards, it'll take you to their investor relations page. And it's best to just see what they're saying about it. You want to see how they present their company because that's what other investors are going to see as well. On the investor relations page, you're going to find a lot of information. You're going to find all their quarterly earnings, all their annual earnings, different press releases they put out. You're going to learn about different conferences that they participate at, and really home base for finding anything out about a company. So the first thing you'd do is you'd go look at their latest quarterly results. Let's go see how they're doing. You want to see how their revenue growth is. Obviously, these guys are doing really well right now. They had 128% growth quarter over quarter and 110% growth year over year. But you have to contrast that growth with their valuation. A company that's growing 100% year over year should, in theory, have a higher valuation than a company that's growing 20% year over year. It's really about how they're priced relative to their peers. So you just want to read through everything that they're telling you in this fourth quarter results. You want to basically become an expert on the company before you give them any of your money. After you read through their quarterly results, you're going to want to make sure you take a look at their balance sheet. They literally tell you how much money they have, how much money they owe. None of this is hidden. So you shouldn't be caught by surprise if one day a company goes bankrupt. You should be looking at their balance sheet and you should anticipate that. The most important things you're going to be looking at on their balance sheet is their current assets and their current liabilities. So you're looking at if they're going to be able to pay their current debts. Let's look at Etsy. So Etsy has current assets of $1.8 billion and they have current liabilities of under $500 million. So they have tons of money to meet all that current debt obligations. And you also want to take a look at their long-term liabilities, their total liabilities. You want to make sure that they have more assets than liabilities. Because think about it, you guys. Why would you want to buy a company that owes more than they're worth? You want to make sure before you put any money into them that they have a healthy balance sheet, lots of cash, that they're going to be able to withstand any turbulence in the market. If Etsy only had $200 million in current assets here, and they had $500 million in current liabilities, then we'd want to stay well clear of them, because they're probably going to have to raise money right away to meet those current liabilities. That's really the most important thing you can look at the balance sheet. Current assets, current liabilities. What do you have right now, and what do you owe right now? Well, another thing you can look at is their cash flow statement. And this isn't super important with a company like Etsy, but if you're looking at a company that pays dividends, then you want to make sure that they have enough cash from operating to pay those dividends continuously. The cash flow statement is appropriately named because it tells you what they do with their cash. So it starts at the top with their net income, and we can go through each of these list items, and they're all pretty interesting. You can see if they're repurchasing stock, which Etsy is, and then you want to look at their net cash provided by operating activities. So you want to make sure that they're getting cash from what they're doing. And a company can still have a negative net income but still have positive free cash flow. It just means that they're investing their money back into themselves. But it's important to look at what sort of cash flow their business generates, because that's ultimately what determines if they'll be able to service their debts and if they'll be able to pay dividends. But like I said, it's not uber important with a growth company. Oftentimes it's negative cash flow just because they're investing in themselves, but it is super important if you're looking at a dividend company. If a company says it's got like a 10% dividend yield, you want to make sure you look at that balance sheet and that cash flow statement, and you want to make sure that that 10% dividend is sustainable. One of the next things you guys can look at is the institutional ownership of a company. Hedge funds and pensions and all these institutional investors, they have to disclose their holdings every quarter. We're able to see what they're investing in, and you got to remember, institutional ownership, really, that's the vast majority of the money in the market. So everyone likes to talk about GameStop and the little guys beating the big guys, but if you're a little guy, you kind of just want to get behind the big guy and follow him, because he's the guy that moves the market. So if we look at the institutional ownership for Etsy, and all I did is Google institutional ownership Etsy, click the first link that pops up. It's not hard to find this stuff. Mutual fund holders hold about 48% of it. Other institutions hold 40%. And individual stakeholders hold about 12% of it. You're kind of looking for the more institutional ownership, the better, because usually they're not as flaky with their money. Retail investors, they'll trade it one day, sell it the next day, but usually institutional owners are long-term owners. We can also go see the top 10 owners of Etsy. You can see that Vanguard has a 10% stake in Etsy, and that they've been net adding Etsy. So that would be a good sign, if they were selling the stock, if most of the institutional investors were selling the stock, it would be a sign that we'd want to get out of it. Just a little note here, it's not the be all end all if institutionals own it or not. I think if you would have looked at Tesla a couple of years ago, the institutional ownership I think would have been really low, but obviously that would have been one of the best investments you could have made. So these are really just tools that you guys can add to the toolbox. None of them are the be all end all reason to buy a stock. You need to consider all these factors. And really, the more you know about the company, the more informed of a decision you can make about it. The next thing you guys will want to look at is the valuation of the company. And that doesn't strictly mean the market cap. It's really their market cap relative to their earnings or sales. So one I like to use is the PS ratio. And it's really useful for companies that are growing their revenues fast, because you can't use a PE ratio, a price to earnings ratio, because most of these companies don't even have earnings. So a 16 PS ratio, and they were growing at about 100% year over year. So the next thing we'd want to do is find another company that was growing at 100% year over year and find out what their PS ratio is. You can use any of their valuation ratios to kind of figure out the timing on when to get into a company. So if we were looking back in 2019, 2020 here, we would have seen that normally they are trading at a 15 PS ratio. Then they fell all the way down to a 7 PS ratio. And that would have been a good sign that now would have been a good time to buy them because they were trading at a lower valuation than they normally do. And same would go in reverse. If they were trading at a 30 PS ratio right now, then we'd say, well, they're trading about twice as expensive as they normally do, and it would be a good sign to sell them. So you guys want to make sure you're listening to the earning calls of all these companies, right? If you're going to be putting in any sizable amount of money, you can at least spend an hour listening to the CEO and the CFO talk about their quarter and getting questions from investors. They're really useful. You'll find out a lot of good information by listening to their webcasts. And like I was saying earlier, you wouldn't just give some bum on the side of the street $1,000 just because he told you he was a fast growing company that was going to make you a lot of money. You would do a little bit of due diligence and find out that he was legit or not. And that's the same thing you got to do in the stock market. So those are the three main things I like to look at, is the investor relations, the institutional ownership, and their valuations relative to peers. There's also a lot of other things you can look at. I know some people like to look at like the Glassdoor job reviews or Indeed job reviews. They like to see if it's a good company to work at or not and what the employees say about it. One that I like to do, particularly if it's a company that would be searched by the public, is go on to Google Trends. So this would work well for a company like Etsy, but it wouldn't work well for a company like CrowdStrike, or that provides a service to a business rather than to a customer, because the Google searches wouldn't really represent the demand in that case. For Etsy, this is really useful. You can look at their Google Trends, and this measures the search interest over time. So you can use these Google search trends to kind of anticipate the demand that a company might be facing. So let's look at this. You can see that they always have a big spike up, basically from Black Friday all the way to Christmas. They always have a huge spike in their search interest as people are trying to find gifts to get people. They search Etsy.com and Google search captures that, and then they go flat for the rest of the year. But look at what happened during the pandemic. They fell off, then they shot up to levels that they'd never had before, basically due to face masks. People were looking up face masks and buying them off Etsy. So if you were really looking forward, you could have went on to Google Trends, seen that they were reaching all new highs of demand, and it would have been a perfect clue to buy the stock. And if you go look at the stock chart, it basically mirrors this demand growth. But the most interesting thing when you look at this is that it has remained at an all-time high. It hasn't drifted back downwards to pre-COVID levels. It shows that a lot of their customers are sticking around and that growth was permanent. I was looking at this before their last earnings release, which they blew it out of the waters, and you could anticipate that. Look at this huge spike up during Christmas. Way more than they'd ever had, and way more than they had even in March when everybody was searching for face masks. So it's just little clues, right? Just little tools in the toolbox that you guys can use to make better informed decisions. So everything I showed you before this point has been considered fundamental analysis. You're looking at the fundamentals behind the business, but there's also technical analysis that you can factor into your decisions as well. And this is more for timing an entry. You'd use fundamental analysis to determine if a company was worth investing in, and then you use technical analysis to determine when to invest in that company. It's really just looking at the stock chart, trying to find patterns, and making investing decisions based on those patterns. So if we look at this 1 year chart, something we could look at is every time it gets around that 193, around that $195 is a bit of a support level. And what that means is that it every time it falls to that level, it started to rally and go up in price. That's where buyers come in, and there's more buyers than sellers at that point. We might be looking at this, it set a new high, and we might be looking for that 195 level again, because history often repeats itself with chart patterns. We might use that for our re-entry. So I hope that you guys enjoyed that video and that you can use some of that stuff in your own stock picking decisions. But really, it's just important to do that due diligence and to feel confident in the company you're investing in. Because if you're just investing in them for hype and because you saw a cool video on YouTube, then you're not going to hold on to the company if it has a down day like this. If you just bought Etsy a couple days ago because you thought it was a cool stock and now it went down 12%, well, you would have had paper hands and probably sold it. So you want to make sure before you put any money into a company that you're confident in their long-term potential and that you're willing to stomach those red days, because you don't deserve the green days if you're not willing to stomach the red days. So I hope you guys enjoyed that video. Hopefully some of it was useful. If it was, hit that like button, hit that subscribe button, and I'll talk to you guys later.